So with that, let's get into an analysis on the charts. We'll start with the VIX. We have the daily VIX chart up. You can see it floating at the bottom of the range. This range has been the bottom for quite some time now. Back from July 2019, May 2025. We're not quite at the exact bottom, but the volatility shows that equities should be moving up. Although equities have been quite at highs for some time now. After the war news tomorrow, we'll jump over here to SPY. I would expect a nice gap down in the morning. Now, just because of that gap down, I would not get excited. I don't think that the gap down will be maintained. I think the more people that enter that gap for a further dump, we'll expect a spike right back up throughout the day to either trap or try to close out some trades that have taken that trade. Unfortunately, most people do just follow the news, and these days we can't really trust the news, unfortunately, not just what's going on. We'll figure out the quick ranges for the day just to see how they're going to react. I would expect a gap down right to the 50 MA. And so you guys understand, I don't use many indicators. I'm not a big fan of the indicators, so I like to stick to a couple moving averages. I have the 50 and the 200 up. I also use the colored bands, which initially show a 21 EMA as well as a 50 EMA, giving us an idea where the resistance and the bounces might take. My guess is the gap down will come well below the 50 MA, back into this range. Nearest resistance and support will show you at, I'm going to guess, just by drawing the box. I don't like to keep it too exact, but the top of the range, I think it should drop to about 729, 730 area. That's where the last order block was, and it reacted from 2 times already. You see a nice wick here on the daily charts. The next range below that, unlikely that it'll hit that on the news from tomorrow, but we got a nice little box coming right down here. So if it breaks below this range here at 721 or below the wick of 716, expect a top of 712 to about 702 maximum. Anything below that, we're back into a bearish trend. A top of the 200 usually causes a reaction. Again, it'll be depending on how the market reacts. The more people that try to follow the trend, the less likely the move plays through. So from my experience over the past 2 years, mainly since Trump has been in office, they've done a lot of gapping, not much moving during the markets. So don't expect a nice continuation as the market is open. I would say that it reaches a certain range, bounces between that range throughout the day, if not completely wicks up, and rejects and reverses on most people that are trying to trade it. We'll check the 4-hour now on SPY. Same idea. It's not really showing a different story as of now. We have an extremely bullish end of the day on Friday. The market wicked up, closed almost at highs. I don't expect to see new highs, but again, it's very unpredictable behavior. Depending on how people react and where the money flows, they will tend to do the opposite and trap that liquidity for their own personal gain. I see, again, the initial tap should take place around 729. I don't think it'll be much lower. Let's expect 733 to 729 is where we should see the market open tomorrow. We're going to go now to the 1 hour. The 1 hour shows quite a little bit of a different story. We've been in a squeeze here since June 11th. So pretty much June 11th, I'd say, is the squeeze is taking place. And as you can see, all these gaps that take place, not really allowing traders to trend into the markets. A nice little move up took place from Thursday to Friday. Tried to wick people out, tapped the 50. That was 1 hour. I don't know if you guys can see it on the screen or not, so I'll zoom in a little bit, but this is kind of the action that's been playing. Most people must have been overbought at this point. They tried to wick them out, maybe caused a few stops, retraced, went back up with, I'm assuming, less people holding their trades at that point. How I would trade this on Monday. I don't usually trade indices. I'm not big on equities anymore since this action has been quite different since Trump came in. I'm showing you all these gaps, gap, 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 gap. And that's been pretty much the story for the last 2 years or year and a half of trading. Fortunately, they're making it a little bit difficult to extract the liquidity and the money out of the markets, but that's what we're here for again, to try to make sure that you end up on the upper hand of these trades. Following the headlines is always a trap. So they're not going to feed you any reality. They're going to use the basic fundamentals, telling you the Fed wash is hawkish or dollar's weaker or the VIX is. They don't really talk about the volatility index these days, but they tend to use very basic analogies. So whatever they're saying, try to look past that. Look for boxes of liquidity, and that's where you'll know that they're aiming to bring the price in to try to achieve people to pile their money in or exit current positions. And that's really the name of the game these days. So the nearest liquidity I would show you here is from this cross and breakout from the area of 745. So like I mentioned, the next area of interest on the hourly shows actually a bit of a different story. We got a support here, a breakout that tapped twice. Sorry, trading views acting a little funny. So since July 2nd, we've been hitting this range. We haven't broke below it since July 2nd. Looking at it from the hourly, the breakdown might even just tap the 200. So 745 could be the open. Anything below, expect it to go into the range of 745 to 739. And anything below that, we're moving right down to 728 to 722. Those are the areas of interest. Try not to trade at those areas in the same direction. Be extra cautious. I personally am a bit of a contrarian, so I usually try to take the mean reversion on most trades. There's no real catalyst to dump the markets. You know how the bleeds go. They usually go quick, they go fast, and they go real deep. So if it's going down, they're going to try to make it so the tape is untradeable. They're going to make it so the move takes place overnight, gaps up in the morning, doesn't really leave a pattern for entry. And the more people that enter, the more likely that that pattern ends up being a trap. Let's go check the quick 15-minute chart, see what any scalpers are going to be into. We're also leaning on the 200. I expect to break below the 200 on the open. So 745 to 740 area, like I mentioned, seems to be the go-to for the gap down in the morning. We'll see if there's a rejection from that area. If there is, you might be able to take a quick scalp up to 748. I would always recommend exiting before that area of interest because these areas of interest always end up being traps. Waiting for them and being committed to those has seen to be pretty ruthless and a little bit risky in today's market. So I truly try to avoid running it all the way up. Anything below that range, I think a quick trade to 733, even 728 is a doable trade. Be careful. If you see any wicks, any pin bars, anything of the sort, take your profit, run. Now we'll go check. Let's check QQQ. QQQ is a bit of a different story. Seems to be running a little bit lower. Didn't quite make the highs that SPY made, probably due to the tech sector taking a hit, the AI sector that QQQ's been relying on to make the moves. Although QQQ is in quite the squeeze here, you see it's making quite a box. We can draw that little bit of a triangle box here. Show you the ranges. This is just a form of accumulation. This means that they're piling orders, stacking up shorts or calls. You can check the open interest to make your own decisions. It's hard to guess. These days, they don't really try to leave these orders in public view. They put dark pools or they make them last minute, but they really don't make the information available. I don't know what's going on these days, but since AI and high frequency trading bots, they've kind of switched up their rhythm. They've made it a little more difficult to read the price and play the charts. My recommendation and my true belief is that the best ways to extract in today's market is extremely long term, playing from the 200s for buys, playing, or I mean, below the 200, it doesn't spend much time, so you could always just sit and wait. But my best trade would be buying around the 200 MA. If you can see it taps, 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 takes a little bit dip below, but if you're playing proper risk management, you should be able to take those hits. Again, if you see large dips, don't enter right on tap. Wait for some sort of confirmation. You might get what you need there. But long term, again, but my main bread and butter is quick scalping. I don't spend any time in these markets. I trust them as much as I can pretty much trust a woman to tell me the truth these days in reality. So I think that playing the long term game is a little bit of a lost cause these days, but that's my opinion. It's just how I like to trade. It's how I've made the most profits and maintained a good risk management and RR on my accounts. Again, I would like to trade mostly on the 5 minute. That's where I stick around. My trading style is a little bit of unique and niche to most people's trading, so I wouldn't recommend you jumping into my style unless you understand direction and you understand how candles react. I like to mainly trade commodities using gold as my main bread and butter. That's usually how I stick it out. So now that we have QQQ and SPY figured out for the day, we can now jump into a few major names. We'll just go through my quick watch list, understand where everything's looking. We'll do that from the hourly. The hourly can usually tell us a pretty decent story by looking at it. You see XBI, biotech. The whole sector has seen a bit of a hit. I used to like to trade biotech. It took quite the run for the first time, breaking below the 50 MA in about, this is only since June 11th, so just over a month of action, just running. But XBI has ran up quite a little bit since last year, so it's had its run. It's time for a little bit of a pullback. How I would trade this, anything below the 50 MA, you can just stick to a short, expect a little bit of a drop down. There's no real ranges since it's been trending in a high for some time. I would play the psychological levels, stopping at 155, understanding how it's bouncing. You could also add a few more indicators to make sure that you're on top of the RSIs and the volume index. Make sure that you see that participation is taking place. I don't see many large wicks, but like I mentioned, the trend has been pretty strong, so I wouldn't expect it just to flush off. Maybe a bit of a consolidation before it picks a direction. And again, this is earnings week, so we should see quite a bit of change or more of the same this week, but we'll find out this week. It's very important. It's a good time for cycling money and capital to be reinvested into the market. So let's hope that they choose that route. Next, we have UNH. Big earnings this week. Like I mentioned, UNH earnings is on Thursday. United Healthcare. It's been quite a choppy mess in the uptrend. It's made its way up from $300, where it was stuck at for quite some time after a large dump up. So UNH highs are much higher than what they're at now. So a run up is possible and likely, but I wouldn't say that it's going to go straight up from the direction that it's at now. On the daily, you see here, we're looking at a solid 50 MA run up. Still hasn't tapped the 50 MA, which is fairly important. I don't think it's just going to run cleanly. As you've seen, the previous trend went through the 50 MA multiple times, which is not even close to the case from this situation. The next resistance is actually right here at 441. We have a big order block here. Bands hitting it over and over. So I wouldn't trade bullish into that. You'd see if there's a rejection at 444, expect a run back down to the top of the 50 MA. Problem with the 50 MA is it's going to be moving with the price, so we can't really estimate where it's going to be over a longer period of time, but it's currently sitting at around 397 to 400. UNH, personally, I wouldn't be trading into. It doesn't look like a good pattern that I would like to trade, but most people see it differently, and we know that there's many trading styles out here still making some money, although that's not a huge percentage of us, unfortunately. We'd like to change that and try to help some people see this a little bit clearer so they don't get trapped. Next, we got Uber. Lost cause. Stay away from Uber. Complete trash action. Squeezing through the bands, up and down, up and down. Nothing that can be done. I'm just going to stick on the hourly for most of these unless it shows some interest of a good pattern. Take Two Interactive took a nice little spike up on the hourly, ran into its previous resistance at 263, wicked right back down, back to bearish. I don't expect it to drop completely down. I'd see a retest of the band, maybe not even make it to the band because the next zone here is at 234. But from there, you can see a small bounce back up to around 243. If you see that it doesn't break below 243, you can take a quick trade up to 250. Again, be careful in these markets. It's a hot week. We got CPI, we got earnings, we got all kinds of craziness going on. And like I said, I just stick to trading gold on a very short time frame, scalping candles, scalping directions, and that still has been proven to be quite difficult in today's market, but it's been working. So that's where I stay. That's where I stand. Next, we got Tesla. Quite a bit of a mess. Tesla reacts to pretty much tweets and news and nothing really of value. It's been up and down. Still a decent company considering Elon Musk. Still pretty much big news in the market. So he's still relevant, which makes Tesla show a lot of potential for overhead movement. That don't see that company going out of style anytime soon. It's going to be relevant for some time. Now everybody seems to be interested in SpaceX, so I don't think Tesla will be making any runs in the very near future. But again, right now it looks like it's just consolidating into a squeeze. If you can see a break above 413, the next quickest area would be 420, then 430, and above that we're going to 445 to 450 area. That seems like the range that it's been making. For the downside, if it breaks below the 200 at 402, we can see the next support at 391 and 381. Anything below that, we're going to take a bit of a down trail to the 341 area. And I'm not sure if it's going to be pretty bearish, but the next earnings for Tesla is this month, July 22nd. So I wouldn't be touching it before that. You can expect some sort of volatility a couple days before the earnings. That's usually the case for these stocks. We got Teams also looking untradeable. I do not recommend touching Teams based on the chart that it's showing. Riding the 200 MA, doesn't seem to want to hold above it. Anything above, we can see it retesting the breakdown at 94, and from there we can get a nice little ride up. Hard to pick the ranges because of all the gaps, but we have a block at 105. Next gap fill would be 113 to 108. 105 seems like a hard stop. Above that, we can see it break the 113 level. I think it'll give a nice move back up. I don't know what's going on with their company as of now, but not too interested as well. If anyone has any questions, again, want me to scan a specific stock, you could always leave your question in the comments and I'll be sure to look into it more. But for now, we're just going to go over the quick week and see some names of interest, understand where the money's going to be flowing, and see how people are going to react to the current news. Next name on the list is T-Mobile. T-Mobile has been in a bit of a downtrend for some time. It made highs back February 2025. That was quite some time ago, and it's been trending downwards under the 200 since October 2025 and still hasn't broken that trend. I wouldn't recommend trading it unless you know something that I might not. The next resistance below is 166. A break below that will bring us to around 152 area, although it spent some time consolidating about 4 months here on January to April of 2024. So it could stay in that box a little bit. So not looking too great. Anything above 191, we could see it retesting the 200 at 201. And anything above the 200, start taking some calls with a stop right tight at the 200 on the daily would be a good longer term trade. Looks like the hourly is trying to break above the 200 for the first time since March, which shows some bullishness. It shows a little bit of positive and upside, although it failed to hold above and failed down right in March after crossing it up from February. So it spent 1 month above very briefly. Risky trade, easy stop loss right at the 200 if anyone wants to take that risk. Above 189. Next area would be 199. Wick below at 206. Then we're going to 215. Again, if you have any questions or want specific ranges or price, just let me know in the comments and I'll be sure to reach out or add some more specifics towards that. We already looked at SPY. Next, we got Spotify. Again, this is just my watch list. I'm sure there's some stocks you guys might have in mind and in interest. Feel free to add those in the comments if you want me to go over them. Spotify looks like shit, just like the rest of them. Crossing up, crossing down, crossing up, crossing down. Nothing of interest here. Daily chart shows a very bearish pattern, holding under the 200. Spiking up above the 50, breaking below. Not holding any upside of any sort, or downside for that matter. It seems to have been in this range since February of the year. Next, we got Snowflake Incorporated. Seemed to have made a massive gap up here just 2 months ago. I don't know how those earnings went. The earnings seem to have gone extremely positive. 22% increase on earnings, 5% increase on revenue caused a good reaction. Maybe not too many people were involved. I guess the open interest must have been pretty low for it to have made that gap. But again, like you see, the gap went up on the daily, spent a few days moving up, which gave people quite a few chances to take their profits. It hit an old range of 279 and immediately broke down, did not tap the 200, and is testing again those highs. Dangerous area to be taking calls from. Anything above, I'm sure you can take a nice quick call with a stop right below it. Next range 332, then 376. Let's check the hourly. Hourly shows a similar story. It's above the 200. The 50 MA has not crossed back down below it. That's always a good sign. Any cross below this band of the 50 MA, you can expect that bull trend to be done, over. So as of now, we're in a bit of a sideways consolidation at the bottom. I mean, if you're looking to take a quick scalp or a quick swing trade that might last a few days, an entry anywhere above 258 can bring you back to 269, maybe 275 if you stick it out. Kind of risky to play past that point. I personally wouldn't do it, but that's again up to you. Stop loss at 258.5 would be fair. Actual box range is sitting around 254 area. Anything below that, you're probably going to be tapping the 200. So depending on your risk management and how you're taking the trade and where you expect your TP to be, a good 1 to 3 trade. Let's see how that looks. Good 1 to 3 might be an easy one. Yeah, so 4, 1 to 4, nice big trade there. I wouldn't take it to the top, so that's why I thought 1 to 3 exactly. Yeah, 1 to 3 RR on this one. Again, kind of a risky trade, hard to hold through these markets, but you'd have to see it open above, hold above, and not gap up on you. Those are tough trades to catch. So add snow onto the trade ideas for the week. Easy, quick run up might be possible. Be careful with it again. Next, we got Van Eck, another EFT holding a few extra stocks. ETF, sorry. Looking pretty bearish, looking like complete shit. Which means that semiconductor area here isn't doing too well. The sector doesn't seem to be showing any bullishness. If anything, it's bearish. A quick short on Van Eck could see you right back down to 603. Next range 595 area, 596 area. It doesn't look like too bad. It looks like semiconductors are taking a bit of a hit. Of course, you have a stop loss right above the 200, which would be an easy one to take. In my perspective, it might even be a good decision if anyone's looking to trade an ETF. These don't quite move as good. You can probably pick a certain stock out of the semiconductor sector if you want to get a bit of a better return. But again, still a good trade in my eyes. Rumble, untouchable. Rumble's been dying for some time. Keep seeing these massive impulses just to get smashed back down. Somebody's hating on Rumble. Not the best platform, I guess. It's not getting too much wind. They keep trying to upgrade and compete with Google and offer new services or entice other people to use their platform, but it doesn't seem to be working since it's been pretty low for some time now after smashing down from its highs. Roku, surprising, actually holding up here. Roku made a run up from 90. The previous year was stuck at the 90 range. It wouldn't break above 100, constantly getting rejected after a massive breakdown from some bad news the previous year from its all-time highs, which you can see are massively up there. Roku in 2021 seen highs of 485, now currently trading at 150. So you can imagine the company's just coming up with new ways to influx some new capital and find some new revenue streams. Next earnings Thursday, July 26th. Daily shows that it is above the 50 and the 200. Whether it's going to stick into a trend is possible since it's broke its range since 2023 finally of 108 108 area. Anything above the 108 area could see Roku run back up to about 164. Anything above that is going to be fairly bullish. Not a bad hold if you want to risk. The company isn't that prominent, but again, that's up to you if you want to take a hold on that. But in my perspective, not a bad long-term trade for your portfolio. Probably not a good swing trade or scalp for any scalpers. We checked QQQ. We're going to go now to PDD holdings. What do we got here? Extremely bearish chart. Retesting the 50 MA after a massive dip down. This looks like a pretty simple trade if anyone's looking for a quick swing trade to the downside. Although it just crossed up the 200 on the hourly, it's probably not going to hold for too long, but makes it an easy stop loss for anyone who likes to take trades from the bottom. This is one of them. The next resistance above head is at 93, so that gives you a decent 10% move. Unlikely to happen in one trading session, but again, easy stop loss below the 50 MA at 83. Probably a decent run up to fill this gap that it made back in May. So 93 is your target. I would not hold it right to the top of the target. I personally would take it to around 92 area. Don't worry about leaving a bit of money on the table depending on how your trading style is. That's just not for me. I like to take my profits I think expectations become a trader's enemy, and I've witnessed that and been a victim to it on many occasions. So I've chosen to stay away from that. What do we have next? Palo Alto. Palo Alto has always been quite the strong stock. It's been making moves and been responsible for a lot of people's portfolio growth over the past few years. As you can see, extremely bullish. Hard to enter on the daily since it's so stretched from the 50 MA. Anything around the 50 MA would be a good entry since it hasn't tapped it once. It's on its second leg from this massive run up. Started at 185, currently trading at 314 from a high of 369. Not a good trade to enter now, but again, looks like a strong stock for the future to hold on to your watch list in case it gives you a good opportunity. I don't see this company going down anytime soon. We got Oracle. Oracle, one of the responsible ones for all the world's problems. We'll see. We got CEOs and quite a list of executives in this company that probably are up to no good in my perspective. Oracle is currently trading at absolute lows. That's always a good sign. We don't want to catch a falling knife. That's never a good idea, but considering it's at a super long-term box here, that's been trading since January this year. Anything above 150, we can see a run back up to about 159. Next range, 169 area. I don't know if I would hold it much above that, but by the looks of it, something can turn it around. See how it dumped off on earnings. This is why I don't trade earnings. Good earnings cause it sell off. People will give you the spiel that the expectations were higher, it was already priced in, or some bullshit, but they're always looking in hindsight, coming up with headlines on how to justify liquidity being flushed and cycled out of that sector. Let's check it on the daily. Daily is also showing a nice low. Although it's been under the 200 for some time, the 50 tempted to go above it. That's always a good sign. It made a shot. Although it failed, I don't expect it to cross back up anytime soon. But as soon as you see this 50 MA kind of flatlining or curving up, it could give for a good opportunity. So again, if anyone enjoys high risk scenarios, this might be a good entry for a longer term hold on your portfolio since it's extremely far away from its highs. Could easily retest 245 area within the next 6 months to a year. So not a bad hold. We got Nvidia. Mr. Nvidia still finding ways to make new highs. Impressive. Although the bubble's thinning out on the AI and the chip stocks, so it's a tough trade sitting around highs. I think the best area for a purchase would be around the 160 area, although any cross down below the 200 might bring it back into the 150 to 130 area, which seems to be its last breakout from 2024. Nvidia's already made quite the move and made a lot of people wealthy from here. So large company, good opportunity. I just don't see the trade being taken from this area. Clearly it's bounced off the 200. Nice bullish candles on the daily, tapping the 50. My guess would be a rejection tomorrow. So unfortunately the hourly is not providing a good entry for any type of shorts. Let's check the 15. Same with the 15, not providing a good opportunity for any shorts. I would say that a rejection from here and a retap of the 50 band would be your best entry for a short. Anything below the 200 is probably an amazing short opportunity. But again, I wouldn't take it on the initial drop. I would wait for some sort of retest of those bands to see if it rejects completely, and that would be my entry. Next, we're going to go to Netflix. Another earnings for this week. Again, Netflix is another great example. Netflix has already been shaven down after reaching over $1,000. It was split recently. Good stock, good earnings, amazing earnings. Look at that, 61% surprise earnings. I guess the revenue wasn't as high, but the earnings, amazing. And what did it do? Sold off and never stopped. This is why you can't trust the outcome of the earnings or the outcome of the news in general. You have to look for where liquidity lies. Netflix made quite a name for himself. Look at these massive gaps up out of nowhere, just coming up with some new reason to get more subscriptions or whatever they say to create a little bit more revenue. But the gaps are untradeable. Really makes it tough unless you're holding from the bottom on a long-term portfolio hold. This isn't really a good stock to be trading shorter term. Then we got the housing market, home builders and supply looking pretty bearish, which is expected since the reports came in down. New home sales have been down. I don't expect the home market to be going up, but any lows give a good opportunity for a reversal. So keep your eye on nail and see if it retests this area. I think the next resistance is sitting right around this area. That would be wishful thinking. So we'll go halfway through that box. The next resistance sitting around $38. Nail is quite down on the year, so it's a very dangerous stock with the way the economy is going and the wars are going, and highs of 180 all the way down to $40. So you can imagine what a shit show that is. That being said, let it hit its lows. Buy. The economy fixes itself. You're going to be in for quite a little bit of a lift. Risk, and depending how you want to hold your capital and where you want to tie it in, nail might be on your list. MSTR, we all know Michael Saylor's not having a good time. His stock has been dumping for some time now. It hit amazing highs after quite the bull run, being the headline and making all the news and catching all these FOMO buyers, and just had it running. But we always know how that ends. Unfortunately, Bitcoin isn't really making much progress, although now it's holding above the 60,000 area for the time being. That could bring some life to MSTR. I'm not too sure what he has in store for bringing his company back to life. I heard he's about to sell some of his Bitcoin to pay some of the debt currently sitting, but we'll see. It's a little bit of a dangerous game. Again, sitting at lows makes it a decent opportunity for the future, but I don't see MSTR holding up like any of the relevant chip makers or AI stocks that are actually going to give us some sort of benefit in the future. MSTR really doesn't do anything. It's kind of a gimmick. Well, to do with crypto, which my own perspectives on as well. Next, we have Microsoft. Microsoft also not doing too well, sitting in a bottom range. These are always good for long-term trades, though. Bottom range is 325. I don't think Microsoft is going to break below 347. If it does, the next range will be 317, and below that, we're looking at quite the spill down below 300. For long-term buyers, Microsoft seems like an okay buy. I wouldn't buy it just yet. I would wait for some reaction, maybe a hold below 407 or a test of the 351 area with a stop just below would make this a very easy trade. But from here, I wouldn't be touching. We're looking at Marathon Petroleum taking the run right up. We all know how oil sector's doing, so anything to do with petroleum is probably getting a bit of a boost. Which doesn't really make sense in my perspective, since the shortage is going to trump all the increased prices on production and their current revenues jumping up due to the war, but 123% on its previous earnings. What did it do with that earnings? Dumped off. dumped off only to punish a few of the entries and then run up choppy as hell. And on June 24th, just a few weeks ago, it seemed to have taken a little bit of a run. I mean, I wouldn't trade into strength, but if you can wait for some weakness up here, maybe a bit of a consolidation. I don't know how high Marathon Petroleum is going to be going as the oil runs out, with the war escalation continuing, and at this point seems to be the worst it's been since it started. Next, we have Meta. Meta looks like shit. Not something I would trade. Took a nice run up from February 2023. It's been a consolidation since the end of 2024. Doesn't look like it's about to break that consolidation anytime soon. Mark Zuckerberg's getting a bit of heat for a few things, so with this massive gap up, might be decent time for a short. Let's check the hourly. Consolidating above this gap. That's my kind of trade. I see a resistance just at the highs here, 690. Not the highs, sorry, the previous range high. It tapped that high in April 2026. That's a nice box rejection. So I'm not sure of the status on why it spiked here. I'd have to look into that a little bit more. But a short from around the top here could bring us back to fill this gap, which might give a good short-term opportunity for a quick swing trade. Again, you'd have to set your stop loss right tight, $6 above head. Exit right around the 643 to 635 area. Quite a big difference. Just hold. I would be riding this with a trailing stop in order not to get wicked or gapped up on the previous session. Again, that's what the gaps don't really help with, because your trailing stop goes to shit as the market closes and opens $15, $20, $30 higher on the next day. Moody's Corporation also taking a beautiful run up. I see a nice trade taking place on Moody's. It looks like it ran up here at the end of June, and right now it's testing the 50 MA for the first time. I like trades like this. I might enter this trade. I would set the short above 484. Sorry, the stop loss below 484. First target would be 495. Try to ride it back up near this gap of 500 to 503. Seems like a promising trade. I'm not sure of the status. These big candles might show a little bit of danger, but as long as it's not holding below the 50 MA this week and seems to show some strength or some resistance on this band, it might be good for a call back to retest where it broke down from. Mara probably doing just as good as MSTR. I would probably take this off my watch list. I hate Mara. I don't know why they're doing so terrible as a company, because mining Bitcoin doesn't seem to be a good means of revenue these days. I mean, people are claiming that we're going to see $700,000, but I'm not sure where that influx of money is going to come from, since BlackRock and Michael Saylor are buying up all the Bitcoin OTC and smashing down the price with their derivatives the way they seem to always want to do. Same thing they're doing to gold. Everybody's scooping up all the physical gold only to smash down the paper price artificially, making it very easy to run from. My personal belief is that's all to sway people into running to CBDCs, try to keep the dollar strong before people realize that the economy is a FUD and it all crashes down on them. And by doing that, the least people holding precious metals or any sort of hedge commodities or safe havens, they're gonna increase the people that need to use CBDCs and need to transfer out of cash, since its utility probably won't be quite as strong. Yeah, the world's quite a wild time right now, so it's tough to even jump into Bitcoin or crypto. Again, the retail participation has dropped massively over the last 2 years. It's tough to see where the new money is going to come from. So I don't see a big run up coming. I mean, I wouldn't put my word on it because this is my perspective and it's educated, but I don't want anybody going to sell their bags based on what I'm giving them information on. If you guys know something better than me, please share in the chats. I'd like to learn too. If you can teach me something, I'm all for it. Always for it at all. We got Lululemon. Lululemon's a big name. Been smashing down, getting a lot of grief lately. I still think the company can survive. I don't mind buying a stock at this price since its absolute highs are way, way, way up there. It's been in a downtrend since 2025 of January. I think right now it's actually reaching a nice little resistance area from way back in 2018. If you can see this, makes Lululemon an easy buy with an easy stop. Its next zone down is quite a little bit of a ways down, but all they need to do is create some relevance around their company. These girls will flock to this company as soon as they make some newer tights. I know they're coming out with casual clothing, which might actually bring in some better revenue. You see their revenues never fail. Still failing. That's all because simple headlines and the way the market works. It's not ever really about how the company's doing these days. It's all about the hype and who wants to flow their money into the company. But again, my suggestion, this is a long-term portfolio hold. Lululemon, I don't believe is going to be a dying company anytime soon. I know that they have a pretty good team who's coming up with new ways to get this stock right back near highs, and it's going to go quick when it goes. If you see the slope on this, that's an elevator down, folks. It could take the stairs back up. As you see, I've traded Lululemon a bunch of times. You can see all my drawings. Always been successful trading it, never been disappointed. Gonna remove those drawings for today. Next, we got another home builder. Home building doing terrible, but again, not a bad buy if you believe the economy isn't finished. If they can come up with a way to start producing more homes. I'm not sure that the government's plan is to fix anything at this point. Mainly, they're all about destruction, chaos. They know that they've pretty much fucked themselves with this government debt. Their government's full of pedophiles and all kinds of horrible people. So until that cleans itself up, I don't think they even want the economy to come up. But again, that'll be up to the president himself, who claims he wants to be reelected and for his own well-being. The only way to do that would be to pick the economy back up. Make materials cheaper, stop fucking with Iran, allow the oil to be released. But with an oil shortage, this isn't going up that soon. But again, a good buy in this range. Could see a nice long-term hold over the next year or two, a nice bounce back up as things fix themselves. JPM, another earnings for this week. JPM's been making a massive run up with, I'm sure, most of the banking stocks. Can't expect much less, but earnings tomorrow earnings on Tuesday is going to make quite the difference. JPM has been squeezing in this box since September 2025. So sitting at all-time highs as we speak. My personal belief is that it's not going to be making a massive run up from this range. I would expect it to make some sort of move before its earnings tomorrow, but because of the escalation, we're going to expect to see SPY QQQ gapping down. Mainly going to be tech stocks being attacked by it. I don't know if JPM is going to get a direct hit on that, but I think a short would be in order anywhere from 340, or if you see weakness tomorrow and anything holding below the 50 with a stop just above the 50 MA could give you a decent run down to 330, next 327, and 324 at the 200 MA. Intuit took a big hit. It was doing pretty well last year. I guess it didn't hold that gain. So beginning of the year, Intuit broke down from its highs, squeezed, and massively broke down after that. Regardless of its earnings, seems to always be doing well with its earnings and dividends, making it look like a decent long-term buy. I don't know what kind of advances they're making, but any drop like this, you could always expect a bit of a V to take place at 274, sitting at a massive resistance level that it hit back in 2019. I think this is another good long-term hold for your portfolios. Intel Corporation, same idea, making highs, doing amazing. We got earnings coming up on the 23rd of July. It's been holding its gains, squeezing up at the top of this range. Hard to take a call on that. I wouldn't touch that stock. Wait till it maybe consolidates further or makes a load to fill this gap from May of 2026, since it's been running for some time. Hood is giving opportunity, holding above the 200. Only red flag here is the 50 MA could reject. You want to see a nice cross up and the 50 to hold that cross in order for an actual bullish sign. Unfortunately, the price could run without you before that takes place. Tough call on the trade. Next, we got Google. I'm going to rush a little bit through this so I don't keep you guys on the screen for much too long, but just so we have an idea of where the money's going to be flowing. Google's always looking strong, made a massive run up, started making its way back down. I think a top of the 50 and a rejection there. Could see a nice short back to 349, 333, and then 317. I don't think Google's going to be running up, but I could be wrong. General Dynamics, another war stock. With the war escalating, if you can see a nice retest of this 50 MA, it could be a good entry for you guys. Only problem with that is one tweet by Trump, and there goes your war stock. So it's a tough call. Although the escalations don't seem like they're waiting for any peace talks this time around, I could be wrong. GigaCloud made a massive run up. It's been holding pretty bullish for some time, finally just crossing down to 50. So that's bearish in my eyes. Easy trade would be a short tap from the 50 MA. I would say stop loss just above the 50 MA, letting it ride back down towards 26 area, potentially lower. Fortnite, massive run up, absolutely massive. Can't trade that shit. Trade into strength, maybe. Wait for a consolidation and a dip down. I don't know if it'll just make the V, but again, not a good touch. A lot going on this watch list. MU, here's a big one that everyone wants to talk about. MU's made one of the biggest runs this year, going all the way from 119 to 1213. We should be seeing a split sometime soon. I've advised quite a few people to take their profits. I know a few people that 10x their investment. Seems like another Nvidia situation. Micron was a dying stock, constantly getting rejected, constantly getting attacked in 2025. It was quite tough to trade this one, especially with options. Now you see it gapping up, gapping up, gapping up, gapping up. Everything is a gap. Nothing is tradable. All you see is holes, making this pretty difficult to enter. But again, easy trade would be around the 50 MA, close below, stop loss just below it, ride it back up. Or if you don't trust this run up, let it sit for a while, see what happens. I don't think it's going to be making another run up anytime soon. Shopify is another one, looking bearish. I wouldn't touch it. QBTS, same idea. AI stocks have been taking a hit. Not a good time to be entering AI stocks. Palantir, We know all the hate going on with this flock cameras. I don't know how this is going to go, looking terribly bearish, although it's too low to be taking a short on, sitting in a major box resistance. Stay away from that. What else do we have? A-Lab. We know this one took a big run up. A-Lab retesting its highs. Looking pretty hard to trade again. If I see a dip back down towards the 200, seems like it's not respecting the 50 MA banded. Also, I couldn't recommend taking a tap from the 50. Tough trade. Ran up over 100% from last year. It's going to be tough to get more out of that without a major consolidation of some sort. Now, let's move to commodities. Commodities, my favorite. We got gold. DXY, here's a big one. DXY sitting in the range since the beginning of the year. Beginning of last year. Trump seemed to have crushed the dollar down after a massive run up. Everybody hyped it up in 2022. It held that range for quite some time. Now it's actually trying to break up back into that range. So anything below 100, we could see a dip back down to around 97, 99. Tomorrow we're going to see a spike up due to the war escalation. How that's going to maintain itself. We got Fed Warsh sitting right at the top of this breakdown resistance for May 2025. We have Fed Warsh hinting on rate hikes, then hinting on reducing the rates, and then we have the entire Fed going back and forth, 9 people voting yes, 10 people voting no, and back and forth. I don't know if those numbers are correct, but that's the idea. They're all kind of in limbo, not sure, can't agree with each other. We got gold, major gold. Gold has made the biggest dump of some biggest run it had. Took about, let's see here, 6 months running up. Now we're into the 6 month on the way down, testing a major resistance. Only problem now is with the war escalation. And any normal year, this would create safe haven. People would be buying gold to hedge the war. Although this year has been quite different with Fed Warsh in play. Him talking about the rate hikes with the yields going up has been suppressing gold quite a bit. And it's been big on the radar for attacks. Massive flush candles, massive parabolic candles up. Tough to trade a range. How I like to trade gold, I go right to the 5-minute chart. This is my bread and butter. I just play volatility. I wait for any test of any sort of band. I also trade gold here, as you can see, with the colored bands. They seem to be helping quite a bit more. I don't know if any of you guys are familiar with the colored bands, but you can see they turn green as they run up. The move tends to end. You'll see them turn red. Usually when they turn red, they'll turn to green, then red again. They won't just switch back and forth and maintain a run for too much, although that position doesn't always hold. Right now, we've been in a bit of a consolidation since its bottom on July 8th. It hit 4,027. Sorry, the bottom is much lower than that. You can see my boxes are everywhere because that's all I seem to be trading. But its absolute low is at 39.43. The major retest is going to be 38.90, and that's the low it made some time ago before the break up. That being the case, we're testing that area now. Anything below is going to be a shit show. We're going to see 3,500 for gold. Realistic, a lot of analysts seem to think that that's where we're heading. But again, it's been bearish for some time, so we might need to see a retest of around the 4,400 area before that takes place. What it likes to do is catch liquidity before it dumps down. Only problem now with gold is that it's at its lowest open interest since actually 2009, from what I'm understanding, which means that this is not bringing any participants to the table. It's not bringing any new inflow of cash. They've shook people out with these $200 moves, $200 back up. Everything's very unpredictable on these charts, although you can see it respecting these bands quite a bit. To hold through these massive ranges takes a very low leverage, if any leverage at all. My best bet is just to buy physical, since they're drying up the physical supply. China's already taken gold paper trading off the tables because of this volatility. They know what the US is up to. They go against all the headlines, just like oil should be up extremely high, but they're smashing it down regardless of the situation. They know that everybody was highly invested, so they liquidate as many people as possible because they don't want you to keep your capital. They want your capital to be kept in their pocket. So again, how I would trade gold, I'm going back to the hourly. Did some funky shit here on Friday. There was no catalyst of any sort. It finally broke its bottom. Bands turned back to green for the first time in some time. As it hit its breakdown area from July 8th, the weakness began. But on Friday, it was smashing back up and down, back up and down. You can see a massive range here of about $50. And these wicks that you see took place in less than 2 minutes. These wicks were flushes, and blink of an eye flushes. No time to react, no time to really do much. Its main source of doing that is to run out the scalpers, because these are the people making the most money these days. People holding stocks are not bringing in the same percentage gains as most scalpers. So if you can see these charts on the shorter time frames, extremely dangerous, extremely dangerous. Me, I personally like to hold through one candle max. I try to trade like a high frequency trading bot. I also have a trading bot taking place here. It's trading Euro USD on a mean reversion chart that keeps me stable throughout this ridiculously volatile time. But again, I take about 30 to 40 trades a day, understanding the direction, understanding how the bands work, understanding where the resistances lie and where it might react at. It doesn't always work with these massive moves, but for the most part, we're trading pretty profitably, making a decent living, trying to stay away from any traps and any long-term solutions. What someone might tell you is to buy gold low, hold till it goes back up, but that could take quite a bit of time. And if it drops down to 3,500, you can imagine the pain that you're going to go through. So my best solution is to hold as much cash as possible, enter and exit quickly, get in and out of the markets, don't fuck around. Don't let these people take your money, because they're pretty good at doing that these days with candles like this, with dumps like this, with pumps like this right after those dumps. Very unstable. They know exactly how to liquidate a basic retailer, and they know exactly how to empty high leveraged accounts. So knowing that, you have to be like a ninja. Like I said, I barely hold past one candle. I do not trust the next move. It's easy to predict that there'll be a reaction in some moments. Harder to predict any zones or areas of interest unless you're trading very low leverage and longer periods of time and just waiting. But those are the gains that they don't mind giving out. If you like to make 5-10% a month, that would be your strategy. Me, I'm more of 100 to 200% kind of guy. I like to sit here and actually try to extract as much capital from these guys as possible. I know they like their tricks, and I always try to find a solution to outmaneuver their tricks, and that's the way I've been trading lately. Silver, you can imagine, is going to be doing the same thing as gold. Ridiculous candles, massive sweeps, large wicks, large ranges, also breaking into the range. Gold is actually quite close to the breakout range as well, $10 away, as gold is actually in the breakout range, which makes it a bit of a different story. But It's tough to say. They've been targeting gold a little bit more than they've been targeting silver, and they've been decoupling now and then, as you can see, minus 20 to 0.07. That was actually opposite during the day. Twice it switched. Gold took the lead on the loss. Silver almost went into the positive, and then they swapped places once again, which shows that silver might be your best bet, since that silver hype probably cleaned out a lot of people from deciding to even trade into silver. And again, their little derivatives tricks with their naked contracts and paper contracts is just a kind of a big scam, right? Because silver is also highly utilized, pretty much it's a highly utilized metal. It's used for a lot of things, for batteries, for way more than gold, which means that the shortage on silver is much more of a worry than any possibility of any shortage on gold. The only problem with that is they're going to buy up all the gold to allow the shortage to look evident across the board and ensure that the PSYOP maintains itself, because when silver goes, it's gone. They're not even going to allow you to buy it. 200 is very possible if the derivatives play doesn't kill itself by pretty much manipulating the price to the bottom before anyone can get their hands on it. Because right now, again, with silver, open interest is at all-time low. They've shooken out all the big players, all the hedges, all the institutions from even touching these assets, because they know how highly volatile they are, and they know how easy it is for these big three to just liquidate them based on nothing, just based on what they want. Another great example of that is Brent crude. Why is Brent crude at $70 when the war is at its peak? Never broke 120, but pretty sure everybody understands that the reserves are almost down to zero. So what's going on here is pretty much fake. So can't be trusted, hard to trade into when their main goal is to liquidate us retailers. I wouldn't be trading oil in this mess. Expect a gap up tomorrow. Will it hold? We'll see what Donald Trump tweets. That guy's pretty good at fucking up the markets, taking the trades or allowing his closest friends and family to take the trades. And somehow the COMEX and the regulators allow them to place these massive orders that they'd never allow us to place. But no one's doing anything about it. So that's kind of what we're playing with, which brings me back to why I play one candle game, because it allows me to extract as much capital in the game that they're playing and not allow them to pull the rug on us at any point. Hard to trust. Let's go back to silver and give you a quick range. So silver here retested these areas of 66. Hold on, let me get in there. All right, so $70. Bottoms of the wick show that they were around the $65 area. Right now it's holding below that range. I'm expecting tomorrow to push the price down. If it breaks below its lows of 55, we can see gold is actually testing the October breakout area where it consolidated from its first massive run up. It could run right back to 46 area, and like a lot of analysts think, 40 to 35 is actually in the books. Me personally, I don't see it breaking below this area, because at that point they're going to shake out any chance of bringing in new buyers. The open interest is pretty much going to go in the negative, which is probably going to shut down any commodity trading or precious metal trading if they continue just selling it off without any real reason. My guess and my understanding of what they need to do is to create more participation, and they'll only do that by bringing the price back into these major zones, turning these bands back to green, attracting some more attention, and only somewhere around the 66 to 70 area will they decide whether they want to flush it off or spike the run back up near the top area. Hard to say. It's hard to say because the news seems to be changing every 10-15 minutes. So my best advice for you is find a really short-term time frame strategy, set tight stop losses, and understand that the rug can be pulled. So risk management is everything. Use minimal amounts of your account. Make sure that you're understanding that any moment could change the game, any tweet could change the game, and you do not want to lose a lot of money based on the shit show and the clown show going on in our current environment. So, how I would trade these coming up Monday, I like to stick to gold. Seems to have a little bit less of a spread and a bit easier to maintain. I'm expecting gold to come back. Let's go to the hourly. So here we got another box there. This is your range, 42.75. That would be quite something if it actually went up this week, but very possible. Next test above 4,200 would be 42.65 to 43.50. That's the danger area. That's where they start pulling rugs. Not many people will be trying to enter much below that, so it's going to be tough to attract attention below the previous high of 4,200, which they seem to have tested last week. Friday fucked over a lot of people, spiked up, caught some bullish entries, flushed them out immediately. That candle lasted about 3 minutes. Then sweep down in an impulse candle, almost hyperbolic, except it didn't continue. Immediately wicked up, only to push back up, only to push back down, which, if you look, actually tested a fib sequence. Sorry about my drawings. So if you check there, it tested the 3-2 fib from the top to bottom of that spike up. I usually wouldn't trade the 3-2 fib. I don't know if any of you guys are knowledgeable about the fib sequence retracement, but a good trade is a test of the 6-1-8 fib, the 3-2 fib. Anything at the 5 wouldn't say is as reliable. Anything below the 6 kind of gets dangerous, kind of shows a reversal, so I wouldn't stay away from those. But a nice rejection of the 6-8 fib usually counts for a good trade back near the highs of the spike up. The way that fib really works for most people is clean runs, no breaks in between runs. So if you see a dump like this, you're going to see it run back up to this area. That's your fib retracement. You do not want to wait for this pump and grab this low, because already that's one leg that kind of invalidates how the fib works, unless you go on a larger time frame and start playing daily or 4-hour candles, but then you're sitting in trades for days, if not weeks, which makes it a lot less reliable and a lot more risky. So again, this spike up on the hourly tested the 3-2 fib, and you can see that right before the market close, bounced back up on a Friday evening after close, gave a big push hourly candle as the volume drops off, which it's been doing every single day at exactly the same time, around 11:30. First 90 minutes of the market gives nice volume. Anything before, I'm in Europe, so I like to trade pre-market hours. China, London, these seem to be giving me the best opportunities. As soon as we get into the US market, the fuckery continues, or I guess begins, I should say, and that's tend to stay away. I won't try not to trade past 11:30 because, as you see, the volume dies off. That's a capitulation. You do not want to see that. It doesn't bring confidence. It brings thin order books, massive moves on few orders. That's not what you want to get caught in. What you want to trade in is high volatility when more participants are there, so you don't become the trap, because their main goal and their algorithms are absolutely set to hunt your trades down, to make sure that they punish you, and to understand where your stop losses and your pain points are. And if you do not believe that you're gonna learn the hard way, because that is exactly how the markets are operating, and we can expand more into that on a future session. With that, I don't have much more to show you guys. If you want to check out Euro USD along with the DXY, as I showed you, DXY should see a little run back up to the high. Euro USD, based on the news tomorrow, should be seeing a push back down. Anything below 3954 is not good news for the euro. We're going to see a flush back down of the lows that it hit after this massive break on FOMC date. Took a little bit of a spill there, which contradicted a bit of the markets, but the president and the Fed want the dollar up, and that's what their main goal has been. They've made many ways and actually kept this dollar strong despite all logic and sense, despite all catalysts, despite all news reports. They held, and finally let go of it. But looking like the bombs they dropped are going to bring all of the yields back up, which is in turn going to give a bit of strength to the dollar. Hard to say if they're going to hold. We'd have to wait for CPI on Tuesday to understand how they're actually going to play this market this week. Well, that's the first lesson we got. That's the first show. I'm going to leave it at that for the day. Again, any questions you have, any comments, good comments, bad comments, doesn't matter. Don't forget to hit the subscribe button below. Hit the alert button and the reminder button if you want to see any future episodes coming up. I'll be doing this every Sunday, along with a few shorts throughout the week to update any odd action or any changes that might come up. Yeah, I think that's covering most of it. Again, if there's anything I missed, feel free to comment. Let me know what you think of the show, and I hope you guys kill it this week and see how that goes. Everybody should be sticking on the shorter time frames, aside from the long-term stocks that I mentioned, but those are going to be 6 months, maybe even a year, depending on how this economy turns out, with the massive bubble in the indices that's been holding at highs unnaturally for some time, as Trump needs it to stay. Expect that bubble to burst sometime soon, but I'm always looking for the bright side and expect some optimism and this shit show to end soon enough so we can get back to normal price action, or better price action, I should say, and start cleaning these markets once again. With that, enjoy your week. Have a good trading session and kill these markets.